Hey everybody, Smart Silver Stacker here. Welcome to another live stream. We've got a lot to cover in today's video. We have got some bizarre action in the gold price and the silver price today that we're going to be covering. We've also got some signs that the global economic crisis is worsening, and we're about to see a wave of stimulus unleashed in one of the world's largest economies. Also, we're talking about China and the Chinese silver premiums, which are rising. This is very interesting indeed, and I think it's a sign of what we may see as more stimulus is unleashed in China. It's going to have a big effect on the precious metals. And also in Europe, some signs that the banking crisis that began last year may be worsening. So we'll go over that, and of course, I don't think it's any surprise that as this global economic crisis continues to worsen, we are marching towards a global conflict. It appears World War III, from my standpoint, is already underway, and it is escalating in a very big way across multiple fronts. So we're going to get into all of these updates today. Just want to say hello to everybody popping in the chat. Do me a favor, put a 1 in the chat if you can hear me loud and clear. That also helps get the algorithm fired up and helps get this information out there. Someone just put in the chat, how many fake collapses have we had now? More than 1,000 for sure. Well, I think that we've had a number of developments which are leading towards a cumulative collapse here. It's not the sort of thing that happens overnight. It happens slowly at first and then all at once, and that may be the point we're approaching. But let's get right into this price action that we're seeing in gold and silver today, because it's kind of unusual. We've got the gold price coming under some fairly significant pressure down. It was up around $2,037 before market open, now down to $2,013. And the thing that makes this unusual is that the price of gold is falling, but silver is actually in the green. The silver price up 1.57%. We've got the gold to silver ratio here, courtesy of SD Bullion, down to 88. You can see yesterday it was up as high as 91.54, which is pretty high. I mean, that's towards the high end of what we've seen over the past several decades. And I still think that at 88, silver is incredibly cheap, a good opportunity. This number probably going to go much lower eventually, probably in the relatively near future, because silver is just so cheap right now. Of course, you can buy your gold and silver at SD Bullion. That's where I buy mine. Don't forget, right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. Now, it wasn't the US dollar index which was causing the decline in gold today. I know that a lot of people like to jump to look at that chart. You know, what's the US dollar doing when they see the gold price moving one way or the other? But the US dollar index actually in the red today as well. So why is gold coming under some pressure? Well, it didn't appear to be on any significant news that was released. This article here on Kitco from Jim Wyckoff, he says that it could be that a big futures trader was either dumping long positions or establishing fresh shorts. So no real obvious explanation for this, but it is a reminder that the price action that we see in the gold and silver markets, it's not determined by buyers and sellers of physical metals. You know, it's determined in the paper markets, determined in futures trading. That is where these prices get set. A lot of individuals out there, a lot of you watching, probably believe that the paper markets are being used to suppress the price of these assets. Of course, we know some manipulation goes on. It's a fact. JP Morgan alone has paid over $1 billion in fines as a result of their spoofing of the precious metals markets. But to the extent that they are being held lower by paper selling, I view that as a huge opportunity to get in there and get these assets below their true value, because we know in the precious metals right now, there's really no real price setting mechanism. It's all about what the Fed's going to do next and perhaps some manipulation mixed in with that. So today's drop in gold, I would say, you know, good opportunity to get some. I don't think it's going to drop below 2,000, but let's get into this is something I wanted to mention real quick. You know, a lot of folks, we talk about economic crisis and economic collapse, and one of the things that we're seeing right now is stock markets hitting record highs, and a lot of folks might think that this is a sign of a strong U.S. economy, that there's nothing to worry about because the stock market is doing okay. This is a chart of the Caracas, that's the Venezuelan stock market index. They're out there inflationary crisis. So I just want to point out here that rising stock markets are not always a good bellwether for what's going on in the economy. And we very well may see new stock market highs and a continuing bullish move in the U.S. stock markets, even as this collapse plays out, especially once the Fed really begins printing in earnest. And of course, if you look at this chart, this is the Dow to gold ratio. The Dow is not putting on new record highs, at least not yet, in terms of real money, that being gold. That peaked out back in 2000 during that stock market bubble. And right now, we haven't really even approached those highs. Now, in terms of the historical level, I mean, it's still relatively high at around 18 or so, the Dow to gold ratio, but it got as high as 40 during the 2000 stock market bubble. So stocks still, compared to previous highs, not at record highs in terms of gold. So I just thought that was an interesting thing to examine. And, you know, I don't know if I mentioned it at the beginning of this video. We're kind of bounce around a little bit today because I just thought there were several developments today that I thought would be worth your attention. But this is one that you should think about when you keep hearing about record highs in stocks. And, you know, real money, they're really not at record highs. Moving on, we talked yesterday about the 2 trillion yuan stimulus package that Chinese authorities were planning to unleash to shore up their flagging stock market over there and, you know, ideally to help their economy as well. Of course, all this stimulus likely just to reinflate whatever bubble Chinese economy was experiencing. But now another development in this today, China cuts bank reserves to defend markets and spur growth. So more stimulus, more easy money getting turned on in China as their stock market continues to drop there. This move will free up $140 billion in liquidity. So this should certainly help to inject some capital into these markets, of course, by making the banks be a bit riskier, I suppose, by not holding these reserves. But this is something that we should pay attention to here, because as the Chinese continue to unleash this stimulus and return to the printing presses, I think, one, it's a sign of where we're probably heading here in this country, and this just may be the first canary in the coal mine, but also, even just China doing this alone could stimulate significant demand for gold and silver in that market. We know that China has encouraged citizens to stack real assets, real physical, tangible assets. It's fairly popular among the Chinese populace to stack precious metals. The Chinese government itself has been a large buyer of gold over the past several decades. They are the world's biggest gold producer there, also one of the biggest gold importers. So stimulus in China could have a significant impact on global markets. And this was an interesting chart that James Anderson posted on X, which is regarding how Shanghai silver premiums are on the rise in a very big way. And you can see down here, this red part of the chart, it represents the premium over from the Shanghai Gold Exchange over the LBMA. And you can see it's getting up to towards the highest levels that it achieves here. And you may see this number rise even more as stimulus continues to free up capital to buy up assets like gold in China. And also, you know, I think this is interesting because this could have an effect of draining Western bullion warehouses of their metals. This is actually not just in silver, this is in gold as well, that the premiums in China on the precious metals are on the rise. So the arbitrage opportunity there for investors to pick up metal in Europe for cheap and then transport it to China and sell it for a profit, the arbitrage could result in bullion warehouses being drained. Now, I mentioned that in a comment on this post, and James responded that he didn't think it would mean the West would be drained of silver because, I don't think any stackers out there are going to be shipping their bullion to China anytime soon. However, I do think this could have an effect on the COMEX, on the LBMA, on these various bullion warehouses, and it could reduce the amount of physical underlying metal there significantly. We'll have to see how that plays out, but this is certainly an interesting trend that he pointed out. Also, Europe, this is a story that we should all take note of. In the ECB, the European Central Bank, asked some lenders to monitor social media for early signs of bank runs. So The European Central Bank has asked some banks to closely monitor the activity on social media to detect a worsening sentiment, which could lead to a deposit run. Two banking executives with knowledge of the request told Reuters. And they wouldn't be worried about this if the banking sector was as strong and resilient as we are being told. The global banking system, addicted to debt, addicted to easy money, addicted to low rates, coming under significant pressure as a result of the Fed maintaining interest rates where they are at the high level, quote unquote high. I mean, historically, rates are not high, but given the amount of leverage in the global economy, they are at unsustainable levels. And this is just another sign that they're concerned about worsening bank contagion. I believe that the banking crisis that we saw begin in 2023, I mean, it hasn't been resolved. Nothing's been done to bail out the banks, really. I mean, a few banks that failed, their depositors got bailed out, but we still have a largely insolvent banking system. And so as rates remain elevated and inflation remains persistent, it's a huge problem for the banks because the Fed needs to get in there and cut rates, but it's going to be a tough thing for them to do as inflation remains elevated and likely to move much higher, especially in light of what's going on in the Red Sea and the Middle East regarding shipping lanes. Now, we're going to get into that in a moment because I want to talk about the global conflict that is expanding right before our eyes. We are witnessing the early stages of what I believe will develop into a global conflict. At least all the signs are there. I mean, I don't have a crystal ball, but when I see what's happening, it is very alarming. Here's the first story. China steps up Taiwan pressure campaign with more balloons. So this is from 8 hours ago. China has sent a growing number of high-altitude balloons near Taiwan in recent days. Now, we're all familiar with these balloons. It was about a year ago that we had one floating over the U.S., but they can use these for surveillance. They can use these for electronic warfare. There's all sorts of things that these balloons can be used for, but the fact that they are now launching several of them around Taiwan should perhaps be a sign of some looming escalation. Maybe not a full-blown invasion just yet, but perhaps some intelligence gathering, perhaps a blockade, who knows? It's not going to be good, though, and this is just one more sign that we are seeing a global conflict on the verge of breaking out across many theaters of war. Taiwan is no exception. You've got South Korea threatening to eliminate North Korea's regime in the event that they attempt to wage war, and there are signs that North Korea could devolve into a war. The Korean Peninsula, one of the most challenging situations there that they've witnessed in decades. Look at this report from Millennium Post. This is kind of interesting. North Korea appears to demolish reunification arch as Kim Jong-un turns against ties with South. And so they have satellite images from Pyongyang that show that North Korea appears to have torn down a huge arch in its capital that symbolized reconciliation with South Korea. Coming a week after leader Kim Jong-un dismissed decades of hope for peaceful reunification with the war-divided peninsula's south, according to satellite photos analyzed by the Associated Press on Wednesday. So, fairly ominous developments there. Going to Europe, you've got the Russians deploying S-300 anti-aircraft missile systems near St. Petersburg. This is following increased attacks by Ukrainian drones into Russian territory itself. A lot of people have been distracted, looking away from the Ukrainian conflict. It is not over yet. It has, in fact, been escalating with these attacks on Russian territory by Ukrainian drones. And look, I'm not saying that there's any judgment to be passed on either side here. I mean, I'm not from Ukraine or Russia, so I don't really see why I should have an opinion one way or the other. But the thing I am noticing here is that this conflict is showing notable signs of escalation. You've got NATO very concerned in Europe as the war grinds on in Ukraine. There have been a number of warnings from European officials that their populations need to be getting ready for war. So what do you think is coming? And this story from Britain kind of confirms that European nations are getting onto a war footing. So this from ABC News. Britain says it has no plans for conscription. Why did they have to say that? Well, it was because a top general says that the UK may need a citizen army to fight the likes of Russia. UK government said on Wednesday that it has no plans to introduce conscription after the head of the British Army said a citizen army would be needed to fight a future war with a country like Russia. Defense Secretary Grant Shapps has also used stark language about the threat to the UK. Last week, he referred to Great Britain as moving from a post-war to a pre-war world, and I think that is a pretty apt description, not just for Britain, but for the globe itself. We are moving from a post-war period to a pre-war period. So, get ready for that. Get ready for inflation, get ready for money printing, get ready for further destruction of supply chains. There's a lot of things you can do to get prepared for that. I think an important one is to get some assets outside of the financial system in the form of gold and silver. Of course, preparedness goes far beyond that, but that is one thing that I think is critical. Here's an update from earlier today. U.S. Navy intercepts missiles in Red Sea while escorting Maersk ships. So Maersk, once again, ships coming under attack. Now, it doesn't look like either of these ships were hit. Maersk said explosions nearby forced two ships operated by its U.S. subsidiary and carrying U.S. military supplies to turn around when they were transiting the Bab al-Mandab Strait northbound, accompanied by the U.S. Navy. So they had a escort. Apparently, they intercepted some missiles launched out of Yemen at these ships. As while en route, both ships reported seeing explosions close by, and the U.S. Navy accompaniment also intercepted multiple projectiles. Now, as a result of this, Maersk is now redirecting ships. Once again, they've got this little infographic here to give you an idea of how much further these ships need to move when they're not using the Suez Canal. If you're not using this blue route here where you go through the Red Sea, pass by Yemen there, you've got to go around Africa, adding many days and many thousands of dollars, tens of thousands of dollars to the cost of your journey. Ultimately, those costs have to be passed on to consumers in the form of higher prices for those goods that are being transported. So this is going to mean higher inflation until they can get this figured out. And Maersk now, once again, is avoiding the Red Sea. Insurance premiums for the ships who are transiting the Red Sea are on the rise. Those costs also have to be passed on. So the airstrikes on Yemen do not appear to be hindering the Houthis' capabilities to disrupt global shipping, despite all the words we're hearing to the contrary from U.S. leadership. I mean, except for Biden. I mean, he basically admitted that these strikes will not hinder them from their attacks. However, he also mentioned that they would continue, and we are seeing that with new rounds of strikes by the UK and the US in Yemen. I don't even know how many rounds of strikes we're at now, 7 or 8, and they don't seem to be stopping much of this. But what they are going to do is they're going to lead to a lot more money printing and a lot more borrowing. This one from Politico. Lawmakers push for more money for missiles amid Red Sea clash. So you've got bipartisan calls here for increased funding for these munitions, which are being expended in Yemen. Senator Mark Kelly, Democrat from Arizona, a member of the Senate Armed Services Committee, argued that the aid package under negotiation in the Senate should account for replenishing the broader range of missiles fired against the Houthis. One of those, the Tomahawk, is made in his home state by RTX, formerly known as Raytheon Technologies. So surprise, surprise, that federal spending, which will be spent in his home state, he's in favor of. I mean, this is how this works. This is why you're not going to see much opposition to all of this borrowing and spending. It's why all the ideas of balancing the budget and avoiding the government shutdown and stuff is all just theater and all nonsense. Because you've also got folks like Mitch McConnell saying that we need more money to be spent on these munitions. In just the time the Senate has been working on National Security Supplemental, operational costs for U.S. forces in the Middle East have risen. Duh. That's what happens when you launch millions and millions of dollars, hundreds of millions of dollars of munitions at a country through these very expensive airstrikes. He went on to say something which I think is very reasonable, though. He's warned for weeks that using million-dollar missiles to defend against $1,000 drones strains an already insufficient inventory of long-range capabilities. But then he goes on to say, the supplemental is our chance to expand our capacity to meet the national security challenges we face. So rather than saying perhaps we should stop using million-dollar missiles to shoot down $1,000 drones, that's a bad idea, he says that we need to expand our capacity and authorize more spending. So that gives you an idea of how this is going to play out going forward as the world security situation continues to devolve on all of these various theaters. This number right here, the U.S. national debt, is going to absolutely explode as a result of this. Now, I know that a lot of the action in the price of gold and silver right now is being driven. It's being driven by paper trading, as we saw by gold that we mentioned earlier in this video. Also, a lot of that is being driven by what the Federal Reserve is going to do next, or at least what markets anticipate. But you got to understand, if this war breaks out, it's already really broken out, but if it expands and millions, billions of dollars are needed, hundreds of billions of dollars more are needed to continue waging these conflicts, there's only one place that they're going to be able to borrow enough money. It's going to be from the Federal Reserve. They're going to monetize this debt. They're going to expand their balance sheet massively. And the dollar, well, it's going to be devalued. Inflation is going to move up in a big way. That's why I'm stacking gold and silver. That's why I think gold's drop is just a buying opportunity. But let me know what you think in the comments down below, folks. Leave me a comment, please. Let me know. Always interested in hearing from all of you. And that being said, share the video, like it. Really appreciate all of you who watch and tune in and support this channel. I'll catch you next time. Stay safe and happy stacking.